Okay, we finally get to the time-based charts here that I've been trying to get to for 4.5 videos. But I had a lot of things I wanted to show you here, and so hopefully that wasn't time wasted and you got some benefit from that. But here, so I've just teed this up here to show you this. So currently, I did this in the context of if I were in your shoes and if I could only pick one template of all the tools that we have. Well, this is currently my main execution template. With regards to anything candlestick, but I always have a footprint chart open as well. But I would have this open here again, and it's a bit of a combination of a couple of different packages. So I've of course got the market structure built in here, and then I have predominantly our graphical order flow package in here, in addition to the auto fibs and measured moves. But I thought I would just give you this lineup here, so if you wanted to replicate this either in trial, because you could do this in trial, right? You could trial every one of these for 5 days, right? And it costs you nothing. Then you might be able to dig in here and say, okay, do I want all of these, right? Or do I need all of these? Right? Maybe the question you're asking yourself. But just so you see them, you can pause the video here. There's 12 of them. Oh, and then I use the Ninja price line here just for where price line, just because I like to have the price line go across the chart. Initial balance, the toolbar, the trade panel for execution over here, market structure, of course we know about that, the auto fibs, the TDI, right, which I'm going to talk about in a second. McGinley River for the baseline, the volume profile, although I have it turned off here just to free up so we don't have so many lines on the chart. Volume profile, cumulative delta, the devil's volume, and then the buy-sell momentum. That's a very solid package here, and I'll show you some of the benefits of using that. Now, I will tell you that, again, this is my advantage, but because I have access to everything, so I keep this one running, but I also keep just a dedicated, oh God, where do I have it? I keep just our graphical order flow here with no market structure very deliberately. Because what I want here is I want to see, this is very much of a volume focus, or we're kind of replicate order flow, but I want to use traditional supply and demand. So rather than the specificity of the market structure here, I'm using traditional supply and demand. What you can see here is, it's not like that's no longer effective, right? So we come down here, we test, right? So you can see here, this is more traditional. So I like to keep that variety. Oh, what's going on my cum delta? There we go. So I like to keep that balance. So I'll have, as I said, so I would have this one right in front of me. I would have this one either a split screen or on another monitor. Again, that's the luxury of having that kind of screen real estate. But we'll go back through these quickly here the best I can. I'm not so good at making them fast, but I'm trying to. So I'm going to do less playback here because the last one was so bloody long, and Ninja's not particularly easy to work with in playbook, or playback. But we're going to just focus on the same day and some of those same areas that we looked at before, and how some of this additional these tools could assist in some of those decision points where you've got to make that decision and pretty quickly. So we looked at this, right? So again, this is going back over Monday's price action here. Here's the first test of the initial balance, right? We talked about that in the last video. Now, and here. Oh, what have I got? I've got this one here is with wicks only, and then over here I have it with the full candles. Oh, I think I do. Yes, I do. So I have full candles here, and then I have wicks only here because there's a lot of lines already on here since I have the band. So this can be too much for some people. It really can. They just too many lines, too much confusion. I've been doing this for so long and working with these tools for so long that the harder part for me is making sure that I don't just kind of go eye blind to them. And so, but again, it just comes with practice, right? That you'll start to see things here. So let's just focus up here because there's a couple things to note here. Now, if you're not familiar with the devil's volume, this is, well, what we're trying to identify is high volume bars, right? Now, rather than trying to explain it all to you, let me come over here. This is featured in the new features of the. So I'm over here on the graphical order flow package, right? Graphical order flow. This is the full package. So I'm over here where this is where we introduced it, and then we added the devil's volume and the TDI. So these would be useful. Any of these would be helpful if you're not familiar with what we're doing here. If you can't, if you're not clear on the content, the text of what we're describing here, well, then these would be helpful, right? So just not to get distracted here, but I mean, it's hard to explain all of this in this context unless you've been through some of this content, so you'll understand what I'm doing here, right? I know I'm giving you a lot of homework, but if you're serious about it, hopefully that's time you can find. Maybe you're not going to do this all at once, but some of them you can play at time and a quarter, time and a half, just so it's not so much video content. I know, I get it, right? I know, I'm just like you. I look at something, a video I might be curious about, and I see it's an hour and 20 minutes, and I go, yeah, do I have an hour and 20? So maybe bite sizes, but I feel you there. Sometimes I'm just a little bit long-winded because there's so much here to talk about. It's hard for me to be brief with it, but I'll try and do a little bit better on this one. So first off, right, so here's the open, right? It's the same thing, same day, right? So right into the open, into a cluster of golden zones, they come down, they get their targets, right? So rarely am I trading this early, right? But occasionally if something really stood out to me, I might take a trade in the first half an hour, but usually I'm going to let the opening range establish so I can kind of see what, all right, we have, is there news, or how aggressively are we moving? Often on a Monday we'll be range bound unless there's been pre-market news here that might trigger something. So we'll recall, when we recall from looking at the 2000 tick chart, that we go up here and we do get a pretty good break of the IB, right? The initial break here is 40 ticks, right? You'll recall. Now note here, we do come right into a golden zone. We literally split the golden zone as we're in a supply zone. That supply zone, as you'll recall from the last video, is from the prior day, right? I got to go all the way back here to this supply zone here where they come up and they tag it. Now note, they're tagging it in the golden zone, right? Yeah, wick goes up and tests the edge of it. Obviously no close. All the way back down, right? All the way back down. Okay, so what would be something that might assist there? Well, let's go in there and dig for a second. Okay, so we recognize, we know where we are because the measured move, it would be either in this case, this wouldn't fire yet until you get a little bit further away. So it would have been the auto fib showing you, hey, you're coming up to a golden zone, and a 50 here because there's going to be a bigger golden zone here. So you can see the range. I know since the gap from the 50 to the 618 here is so large, I know that that's a higher time frame. That's a bigger swing than something like this where they're very close together. Same here. If I have this big of a gap, I know that that's a larger swing because of the distance, right? Just maybe that's self-evident, but I thought I would just revisit that. So so here as we just looked at the last one, here's the pre-market low, right? So the first thing we get off of that, we get a little pop. Now note where we are, right in the McGinley River. We pop a 50. There's one target, second target, right? We keep going, and then we go from one golden zone, target, swing. We get down to the base here to the pre-market. Oh shit, what is it? Pre-market mid. Then we get our first little algo swing in the McGinley River. Now look what comes out of that, right? This is what helps you not only take the trade, but stay with the trade. So you'll note in the bar, well, let's open this up so you can see it a little better. This is kind of a doji, but within that bar you can see two green arrows. So I know I've got the speed of the volume is accelerating here. So I've gone one standard deviation, the speed of the volume of the last X. Well, you can set it to whatever. I think our default is 5. But additionally here with the devil's volume here, so this is 150% of the volume of the last X bars. And again, I think the default is 4 bars. So I can see a big increase. Well, just looking at it, I can see a big increase in volume. Now, equal volume here. Right, interestingly, but look, two green arrows. So if you took this trade because of whatever reason, retrace, we're at a 50. We're in the McGinley River. We've got a perfect algo retracement here. We're right on the edge. Now look below, right? So we've got the devil's edge, right? Never goes red here. We don't cross the signal line. We don't cross the midline. We just carry up, right? So as all of this is happening. Right, as we've got this, now look at the cum delta. Right, cum delta is accelerating here. We're pushing the edge. Right, we put Bollinger Bands around our cum delta, so I can see I got really tight consolidation here. Then all of a sudden I start to expand, and green. Look at the line, the RSI, green. Here we're pushing up here. Now I got volume. Right, so volume is coming in. So I've got everything here is screaming at me. Buy. Right, we're going higher. That's just exactly what I want to see. I don't want to see this. I don't want to see, oh, well, maybe, okay, well, we're back and forth. As soon as I see this kind of action, I get out, right? Because I don't know what's happening there. I want to see aggression. This is dangerous. I don't know which way we're going there. The one advantage I would have here is that, note here, I'm at the 3-4 ATR band here. So we've gone from this ATR band to this ATR band. Now, for some people, it's too much, right? It's too many lines on the chart. You got to make your own decision as to whether or not you can kind of see what's happening through that. Again, with practice, right? It's in screen time. So are you taking that trade? I mean, is there anything here that would be suggesting, oh no, I got to get short here, or I don't want to be in? Boy, it would be hard to find the bearish side of this moment in time. Up to the zone. Now here's the classic, right? This is what you're hoping for. Oh, maybe I'll get a retrace here, but come back up to that zone before we roll over. Well, is this one? This one is wicks only here. So this is the full candle here. So note here we go literally to the tick edge. So now we come back up just into the wick of it. I know. You're thinking, oh, come on, man, it's easy in hindsight. Well, I'm showing you this because that's what you want to see. Now, what I do, see, here I get two little arrows here saying, oh, some volume. Because why? Because bulls are trying to push it back outside, right? Bears want to get it back inside. I'm telling you, you have got to pay attention to the IBs, right? You got to watch to what happens there. This is time to be paying attention at the IB, right? There's opportunity there because, again, this is algo thick. Now, we know we don't have to want. There's an algo that sits there for the first test. It fades it every day, right? Both sides, right? If you don't have to take my word for it. Go back through your charts, right? Take a look at it. Right? I'm the only educator who teaches it. But the rest, I don't know what I'm certainly not the only one who knows it, but I'm the only one who's revealing it. That's the easiest money on the board every single day. Every single day. Don't take my word for it. Go back and go through your charts. And if you don't have an IB indicator, draw it, right? Take a horizontal line at 9:30, and when you get the low at 10:30, draw them. Now go back. Do 2 weeks. Shit, a week would probably convince you. Do a month, right? You just look, right? Just pull them up. Say, what happened here? What happened here? I digress. Okay, right, swing. So, wouldn't this be what you'd hope to see? Oh, they're going to push. We come up into a supply zone, and we roll over, right? The RSI, this is very responsive, right? So as we cross over here, boy, if you weren't already short, maybe something like this would have given you another shot to get in. I don't think it goes far enough, right? So you're kind of left. If you didn't take it here, you're kind of left hanging. So now let's just stay with it. Let's say you missed it. Okay. Oh, damn it, I missed it. Oh, look, I went all the way. Right, you're frustrated. Now, what we come down here again, pay attention to this. When these get outside of in this case, it's the 32 on the low end, so it's 68 to 32. When we get, everybody's outside of that, and we get the RSI outside of the Bollinger Bands, and then we cross the signal line here. Oh, God, let's see if I can do it this way. Here, I'll just use it with when we cross right there, right there, we're crossing. Right, well, here. Now look at the devil's volume. That's exactly what I want to see. Right? If I were taking that trade just off of the RSI, well, I want to at least see some green cum delta, but then I get a nice big fat volume bar here, right? So boom, up we go. Now there's no arrows in it, so maybe it didn't come early, right? This is gonna, you can set it to what you like, but I have it set to 15 seconds. So I want to see if it's in the first 15 seconds of that bar. If the speed of the volume picks up, well, it's going to register. So here I had 2 standard deviations here, because I have 3 little arrows. So I come all the way up, boom. Where am I? Well, number one, I've just hit a 50. I'm at the McGinley River. Right, I come up here. Now, so this is the outside of this bar is coded red. So thus, that means that 70% of the volume was in the bottom 30% of that bar. I know that's a mouthful, but you think of it this way. Maybe I just draw it. It'd be easier. So you think within that bar, within that bottom third, Oh God, I don't know if I'm making this easier or not. But with 70% of the volume was in the bottom third. So the implication is, and it's not, it's not going to be 100%. But if all the volume is at the low end of the bar, as we go into the next bar, you would anticipate that would continue. And so not only does it continue, but then it speeds up. So I get more sellers coming in early because I want to know if they come in early, because then maybe I want to do something like this, right? As I've described. This is how I like to enter the market, right? A break of a low. I like to get stopped in. So stop me in, so it's coming with momentum, and then I can be very precise about my stop. So, oh God, if I do it, I think I can do it this way. So if my entry is right there, right, that's more than I would give it. Right, I'm going to give it no more than 16, right there. Okay, so let me bring this down. There's the algo target, right? So I'm stopped in. My stop is never threatened. It just goes in a straight line right to target. It's a little over 4 to 1. Again, right? Look at the RSI. As we come over, we go red, down we go. I got a big red bar here in the cum delta, so obviously sellers are the aggressors. And then as we come down, now I've got increasing volume here. So I get 150% of the volume of the last 4 bars. Boom. As we're hitting the algo target, as we've just broken structure. Right now up here you see trend up, but that's because this goes forward, and then we get another break of structure. So we go from uptrend to downtrend to uptrend. Oh shit! I know that's annoying to have that on. So now that see as we break this, here's the break of structure, and then another break of structure. So that's what changes the trend to up. But I want you to see the trade there, right? So there. All right, you say, okay, well all right, maybe that's something I'd look for, but I didn't get that one. All right, so now you're coming back here. Well. Okay, so we come down here. So no, why are my cum deltas acting weird? I think because I've stopped it in the middle of the day. Okay, where are we just visually? Okay, pay attention here. Now I'm in between 3 and 4 times the ATR. So you'll see this is very common. We'll go to the ATR bands to the midline, to the McGinley River, home base. Back down to the ATR band, back to the midline. Back down to the ATR bands, back to the McGinley River. Right, this one gets a squirt through we get over to that 50, in between the 50 and the golden zone. Down we go again. Right, so look, as we come down, here's the acceleration. 3 candles. Here we had a little up bar, so I'm kind of going too fast here. The light blue and the pink, that's 150% of the volume of the last 4 bars. When you see, here's bright green, that's 200%. Bright red, 200% on the sell side. Right? You'll see more commonly the blue and the light blue and the pink, because it's more common to see 150% of the range of the volume. When you see, this would be very typical, right, to see it on the open. You got all the volume at the open. Of course, you'd see it on the close as well. But when you see them during the day, you see 200% of the volume up or down. Heads up. Right, it's telling you something's going on. Well, so here, just carrying on. Again, I know we went through this in the other videos here, but I just so you see. So here we're going to swing 50. Right. This does not get to target. Right. The target is down below. Right. It doesn't get there. Right, so just because there's an algo here, oh God, it looks like it's probably this one. Right, so we're right here. That doesn't mean it's going to get there, but so this eventually breaks. Oh shit, does it? No, maybe it doesn't. So this may have a stack of targets that are still down below. It doesn't look like it broke that. Right, actually. So this has a target. Here's the swing. It's looking for this, but that algo that as long as this stays unbroken, that target is still down here. Right, that's the benefit of the measured move indicator. I know I've got all these unfilled targets down here. All right, let me just keep going here. Oh, my cum delta is not liking that. Okay, so as we pop back up here, here's when we get into the pocket, right? This is where we know algos are responsive, right? There's the open, there's the IB mid, right? We just looked at that. So now if you were, I don't know, it looks like maybe they're going to break up towards the supply zone here. Maybe we're going towards the top of the ATR bands. We come out of it here, so there's a big up bar here to push to get up there. We get into the pocket, down we go, right? Here's the acceleration. Look at the, right? So if you were struggling, I don't know, should I pull the trigger there? Look at the RSI. So here's what I'm talking about. We get outside of the Bollinger Bands, right? So you see we highlight it when we get outside of it. Now I cross the signal line here. Right, I got a mixed signal here. I don't get a big reaction here, but buyers are trying to fight. Note there's green arrows inside the crossover bar. So this, if you're looking at a footprint chart, you'd see, and this would have been a battle here. Note we're inside the McGinley River. right? They're fighting here, you know, bulls and bears fighting it out as they are damn near on every bar. But here, so then all of a sudden, the bulls, pardon me, the bears overwhelm. Down, 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 down. Now where are we? Back to the low end of the ATR bands. Right, we come down here. Now here we go back. There's the RSI again. TDI is really become one of my favorites. Oh, then we're up here, up, 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 up again. Look again. Right, TDI goes over 68. We get outside of the Bollinger Bands. Now they're right there. Right, can you take that trade? Oh, God, I don't know why am I. There we go. I don't know why my Hume Delta's doing that. We come over here we are right now. So you know that's a decent trade, right? You don't just because. So we're going to go right to the McGinley River, right to the next golden zone. That's 48 ticks, 600 per contract. I mean, that's not a bad trade. Note here as well, this I'm kind of draw it here. This supply zone here has been up here this whole time. Right, so boom, 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 we get it again. Right, you trade them till they fail. You trade them till they fail. Okay, let me get this off of here and push on a little bit further. Okay, I'm gonna pause the video. Just pause the video here for a second, and then I'll fast forward here, and then we'll wrap up with this one. So let me pause just for a second. I paused it here just for a second to show you this again, just a reminder. So you'll note here we've just tagged the IB low here. Now remember, it's the first test only that you can count on this. First test. So if we bang it again, it's different scenario. First test only. So look what happens here. We literally tick it here. Then look at the blue bar, right? So a big surge of volume comes in here for a couple of reasons. One, bears know that if they're going to break it, they got to bring some strength here. So volume, it's got to be aggressive. Bulls are going to defend here, so you see the result of it here. So as it ticks it, then we get this reaction. Look at the RSI. So you come down below the Bollinger Bands and you get that little pop. It doesn't last long. It's short-lived. Then you get 150%. It's interesting, right? So you get 150% of the sell volume of the last 4 bars coming into it, and then 150% of the buy volume of the last 4 bars coming out of it. Now that doesn't look like much, but just from, you know, assuming you're not going to get all of it, there's 38 ticks. That's 450, right? So just off of that little reaction, again, easiest money on the board, day after day after day. You got to look for it, right? Emphasis, first test only. All right, so let me pause again, and then I'll keep going. I've gone a little further forward. Just a couple of things to show you. You'll see this on a very regular basis. Let me get my little tool here. So here's the drive. Note here the drive of volume right here. So they're pushing down, right? So here's the reaction. Now if they're going to break it and sustain it, they got to bring some horsepower, right? So here comes the high volume you see down here. We come down as we put in the pivot. Oh, all of a sudden, right now buyers are reacting because bulls are trying to get back inside the IB. Look here. So I've got double arrows, triple arrows, then a big shot of volume here because they are trying to get back inside the initial balance. What do they run right into? Right, it's a little hard to see, but if I pull it, oh, whoops, wrong one. This one here is from this pivot to this low. There's the 50, and there's the golden zone, and there's the target. So here's the pocket where we know the algo is going to be responsive, right, between the 50 and the golden zone. So there's a little pocket. Now, if I draw, right, so you saw, look at the last one. Oh, is it right here? Right. So there's the little the supply zone that's here. Now I am on my wicks or candles here. No, I'm on candles here. So you can see you've got that range here, but now this is where you have to be careful because I got a supply and a demand, and around the IB you'd rather see push in and then push straight down here. In terms of entering the market, this would be tricky. So a couple of things. One, you're at the lows of the day, right? Terrible place to enter a short. Terrible. You know, don't take my word for it, right? Let the market teach you, but you're going to learn a hard lesson there. That yes, as I have to say, right, there are going to be times when that's going to break and go. Definitely, of course there are. But in terms of the probability of you being profitable pursuing that strategy over time, Well, again, you learn from me, you learn from the market. Okay, so now we may, I think we do actually fall down here, but this would be not a place where I wouldn't even think about shorting it there. So one, I'm in this range here now. Who's going to win that? How would you know, right? Well, the trend is down. Where's the look at the TDI, right? This is where you're on both sides of the center line. This is consolidation. It's 130 here. It was a little bit later to be anticipating this. Often, about this time of day, if there's going to be a trend change, there'll be a sweep to get all weak lows out or to accumulate as much liquidity down here and then ramp it here. Now I'm saying that with hindsight, but it's not uncommon. But my point is here, right around the initial balance, it's very thick with algos, right? So you got to be careful down here. You can get chopped up down here, so you have to be careful with it. This being a good example, sell volume literally on top of buy, or a supply zone on top of a demand zone here. It's dangerous for entry. Let me play this forward here, and then God, I'm just going so long here. So now let's see how we do here. There's your classic reminder of why it's a dangerous place to enter. Right? Do you have any? Are you getting any benefit here? Is there any help here from this kind of chop here? Again, there's no particular advantage here. No advantage in the volume. The one thing that I can lean on is that I know the trend is down. Certainly the trend is down. Let's clean this up a little bit. All right, so swing, nope. I just got to point these out, right? You'll miss them, right? So we've gone from this 50, we come down, we get a pivot here. We don't crack the low, we don't break that pivot. We retrace golden zone at the edge of the McGinley River, right? We literally tick the McGinley at a golden zone as we're trying to get back into the IB, right? They get rejected. Where's this algo's target? Just got hit, right? Just got paid, just got its target right there, right at that green line. Now at that green line, what do I see here? Well, as this bar is accelerating here, I can see three pink arrows in here telling me, boy, I've had a big increase in the speed of the volume, so sellers are aggressive here. Look here, 150% of the volume of the last 4 bars. Look at the RSI. Look at the cum delta. Right? Is there anything there saying be a buyer? Well, not at that moment in time, but you got to be careful here. So if we were looking for a buy, the idea is never to try and pick the turn. We're not trying to pick the turn. What you would want to see is some sort of change of character. Right? Because right now we're doing higher low, or pardon me, lower low, lower high, lower low, lower high, lower low, lower high. So the change of character is changing that dynamic. Oh, all of a sudden I got to get a higher low. Well, then I got to get a higher high. So now if I come back to a zone, well, then I could be interested. It's accelerating down here. So once again, we're at the lows of the day. Now we are accelerating. This would be a dangerous place to be entering. Remember, an algo hitting its target is not a signal to go the other direction. Oh, okay. Let me pause here, and then we'll play it forward. I've just gone a little bit further ahead. Now, here's another example where, I mean, that's I've got a stack of supply zones here, and that might be too much. So, okay, which one? So there's another example where going over to just wicks only might be your preference, right? So I can see where they are, and I can draw them based on that. But if you're getting used to it, it might be more helpful to say, okay, well, let me see where they all are. So if one breaks, or I'm not going to miss where the next one is. I stopped here just to show you. So a couple of things. Note, like here, we're at 4 times the ATR. We're pushing that. We're inside that pocket. Now look what just happened down here. This is a pretty good example of it, right? So we are putting in new lows here, but you'll note just what you're looking for, the divergence here, right? So we get below 32. We get outside of the Bollinger Bands. We cross the signal line. So there's likely a scalp there, but that's, you're trying to pick the turn there. That can be high risk, so this is not a great place to be entering. You probably got away with it there for a scalp. You probably got a scalp, right? It's probably, there's 18 ticks, so you got a scalp there. Now, are you ready to go right there? Well, you've gone from the low side of the Bollinger Bands to the other side of the Bollinger Bands. Now, sure, that could just continue to rip, but you're about to come into a whole bunch of supply. or I should say, into a series of supply zones here. We don't know if there's going to be a bunch of supply drop in the market. We just know on all the breaks here, we're leaving behind potential supply zones here. So as the market were to come back up, I can see, just looking up ahead, well, there's the McGinley River. Here's a couple of golden zones. Here's a bunch of supply that the market's going to have to eat through all of that to get up and get back into the IB. Oh, let's play this forward here and see if we get any kind of a reaction here. So there's a big, you can see they're making the effort to try and get through. So you can see it, right? So there's the effort. That's being rejected. Now they're trying again up into the supply. Now that's just if you were thinking about being long. Let me stop it right there. So if you were thinking of getting long down here, this is, and we went through this in the other video on the 2000 tick, but you can see it the same way here. So let me draw it this way. So here's the demand zone here. Remember, it's the last down before the up. So there's the demand zone. And this is, I showed you the line drawings of this in the last video. So, oh God, here, let me show it to you this way. Right, so here's the push that changes the character, right? So it's been lower, low, lower, high, lower, low. All of a sudden, I got a higher high. Now I come down, I do not get a new low. Right? Higher low. Right, now, so this one, this one is, you didn't get as much confirmation, but here's the change of character. Now we're coming back. Now note here, look at the supply zone, or excuse me, the demand zone. I get just a couple of ticks into the discount range. All right, let me stop it right there, and let me get my crosshairs. Look at we'll look at the TDI and the cum delta and the actual volume. Boy, does that say rip. Now I stop it right there because, okay, was there a trade there? Yeah, obviously there was a nice long there, right? So I'm trying to do this as it wouldn't have been hindsight, right? So I mean, there's $700 right there. What have we done? We've gone right to the 50 of this zone, so we can look at it. I mean, again, we went through this in the other one. You're at a 50. You're in the middle of the McGinley River. I got a 618 here, and then I got the IB high here. So this might be an area where you might anticipate some resistance here. But again, right now, trend is still down because the last pivot high. Well, this is the last swing high. So for it to break, here's the swing high. This is the internal high. So do you see here? So I've got the internal low and the internal high, but then I've got the swing low and the swing high. Again, you're going to have to watch the market structure videos to get clarity on what that means, but I'm coming into all of these supply zones here as I'm coming into some technical levels. Right? The TDI is looking pretty hot here, so of course that could just, there's nothing that says, oh, if it's over it's got to come down. We could bounce here and then go again. So let me pause here and then we'll play it forward and go to the next decision point here. So stand by for a sec. Being able to pause the video is a lot easier. Okay, so now I know how to do that. Maybe I can make this a little bit easier. Okay, so what do we do? Do you see this here? There's a 50 and a stack of golden zones here. So we go up there. Again, I'm just trying to show you the things to look for. Okay, so if we were going to go hard here, here's this big shot of volume, right? So buyers get aggressive here, and they come in fast and hard here. A bit of pop of volume. It's not 150% of the volume because volume's been rising already. So to get 150 or 200%, this would need to be even more volume. It's easier to do it here because I've got lower volume in the prior bars. So here I've got a big upswing. Look at the TDI goes way above the Bollinger Bands, and now right here we cross right there. Look at the cumulative delta. Now you don't know at that moment in time, right? At that moment it looks like this. Well, it'd be more like that. Now you might be thinking, oh shit, I'm late. Right, all the more when it's there, right? You've got all of these conditions. You're at the 50. You're at the golden zone. You're in a supply zone. You got to be ready to go quickly, or you've got to do something as I will often do, which I would encourage you to consider. You can either pick the break here of the halfway point of the supply zone, or something that I like to do would be to get stopped in right there. It's always going to do that, right? So I'm going to get break, and you can. Part of that is because I can use the trade panel here, so I can have it stop me in at the break of the low, right? So I can either put it on the chart, or I can sell down by. I mean, you have to watch that video here, but that gives me a lot of flexibility in terms of how I get in. But I might just do it like that. get stopped in, I'm going to have a 12 or a 16 tick stop on that, depending on how aggressive I want to be. But boom, 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 boom. Where do we fall? Right to the, well, oh, pardon me. That's not a supply zone. That's a stacked imbalance within the, so if you were looking at a footprint chart, that would be three prices in a row where we had just bulls overpowering here. So it's nice that one of the things that you can see from a footprint chart are those imbalances here. Where we bring it over via the buy-sell momentum, we show you the stacked imbalances that are happening on the footprint chart here on your candlestick chart. So I know right here that if I know that bulls were aggressive here, are they going to defend? Maybe, maybe not. I know. So that don't be confused by that. I could probably change that color so it wouldn't be confusing. But if we break here, we've got demand zones here right below here, and then we're coming into the lower edge of the ATR volatility bands here. The TDI, we're approaching the midline here, but you can see that this is already starting to set up and look like a pretty good flip. So here's change of character. We come back to it. Now we come all the way. Now are we coming back down here? Boy, wouldn't that be a gift, right? If we get that. So let's just play it here and see. Can't remember if we break here on this one. Okay, so in this particular case, right? So if you took that setup there, well, you're stopped out, right? That's good. I'm glad. I don't want to show nothing but winners, right? That's not a reality. Okay, so here was the zone right here. So you had all the ingredients for it. Here we go up. Now coming back down to the zone. Well, note what happens when we get there. Right, so if you were hesitant, what you don't want to do is sit here with a limit order, right? You want to see evidence of the market starting to turn, right? So it means you gotta be paying attention. So as we get to that bar, and then you see all of that acceleration. Now look at the bar here. There's nothing, right? So what you would hope to see, come back here. What you would hope to see is that the TDI would start to turn. Right, we get the opposite. I'm getting more separation between the signal line and the RSI, and I've crossed the center line. Look at the cum delta, right? We're coming down hard, right? So sellers are very aggressive here. What's happening here, right? We're going after some targets down here. I mean, you can see the stack of them all right here, right? For each one of these is going to have a different target down here. So down they go trying to get those targets. If you were sitting here with a limit order, you were out in a hurry. Right, so it's not just because there's a zone we want to buy it here. You want to see evidence of the market responding to it. So, all right, let me pause there. And God, this is going long again. I'll try and wrap up here with the next couple of decision points. Okay, so back in a sec. Okay, I've gone just a little bit more forward here. So, let's just a quick review here, and then I'm going to wrap up because I could go all day. Okay, so note here from the last, we break down here. So you see the aggressive selling down here as we pop up here. Note the RSI doesn't even make the low end of the Bollinger Bands, right? So that's a first. Interesting, right? You would anticipate here with all of that aggression that we'd be pushing down towards the low end of the Bollinger Bands. We'd get that 2 standard deviation move. We don't get it. Up we go. What do? We bounce right into the McGinley. Right into the McGinley River, right at that break of structure, then we come back down. Now here's the 50. Right, so come off of there. Right, so there, swing, retrace to a 50. Right, we got slightly, then boom, in big shot of volume here. So this green line, I don't know if you can see it here. This green line right here, that's that algo's target right there. So as this shot of volume comes in, you see the 3 arrows, so we know they're aggressive in the first 15 seconds of that bar. What do? Pop right into a golden zone reaction. So look what it's really just it's really remarkable. So we go from this 50, we get its target, hit a golden zone, then we come back, and what do? We drop right into the next golden zone. Now right there, you might have been, this is why these two work together. If you were down here going, well, I'm not going to take that until I get into the premium, or to the discount zone of this demand zone here, well, you missed the ride here. So you don't want to lose track of our old friend here, which is the dominant algo in the market, just because you're down here waiting for a demand zone to get hit. I mean, you can, but I'd like to think that the one thing that I've made very evident in virtually every video I've ever done is how dominant this algorithm is. I mean, Jesus. Golden zone, target, 50, target, golden zone, right? I mean, how many do I have to show you before you kind of clue in here? Okay, so now we're rallying here. Here's the last golden zone here, and I'm going to wrap this up, or this is going to be again too long. we know the rest of the day, right? So the rest of the day, then we get the big ramp, right? That just goes nonstop, right? We go all the way, we end the day all the way up at the IB high, right? So since we went through that on the 2000 tick here, I'll just, oh, I don't know if there's anything here. Let me pause it here. I'll see if there's anything that was significant, and then we'll wrap up. I paused it here just to show you this is the kind of thing to look for, and this is why you can see it here in this template, which is a kind of a combo of market structure and the graphical order flow. When they want to get back inside, or when they want to break the low, this is what you'll see. They got to bring the muscle, right? So you look at all the volume, right? So now they're because they know they got to break the bear side here to get back in. So boom, look at the cum delta, right? Look at the RSI, look at the volume, right? This is big muscle, right? Because they got to bring that to get back in, which they do, right? They come back in as we're now approaching. Here's a 50, and that being a supply zone here from earlier in the day, where we saw how this was. Well, we had a couple of areas in here. There's a little bit higher, but we were leaving this little supply zone here as we're pushing into that, as we're back to the pre-market low, right? So after all of this activity here, we finally get the last little push here. Now they're bringing the heat, right? Big volume. They're aggressive. Cum delta is ripping. RSI is, I mean, we're pretty well overextended here. Oh, let me so you know the rest of the day here, but let me pause here, see if there's any good decision points that come back here. So back in a second. Right to that supply zone we were just talking about. I mean, this is, you have to draw your own conclusions about how. Look, I'm just showing it to you, right? It's just yesterday. Golden zone, golden zone, golden zone, golden zone, golden zone. Here we flip, we come all the way up to the supply zone here. Now, so is this a hard trade to take? Yeah, that's a hard trade to take. What makes it a little bit easier? Okay, well, look at the TDI. Remember, we're very extended. We get all the way up to 81 here. And we're crossing the signal line there. Look at the sell volume here come in. Now, you look there and you go, it doesn't look like much. There's the pre-market low, again, that range that was so obvious over on the 2000 tick. Well, let's assume you're not going to get all of it. So let's take a portion of it. That right there is 26 ticks. That's 325, right? So for a scalper, that's a thing to be looking for. I mean, is that a scalp, right? 26 ticks, I suppose for some, right? But I mean, my scalp is anywhere from 6 to 9 ticks, right? So I for 9 in this level of volatility has been quite good. So if you got your 9, right, that might be not a bad place to say, okay, well, my ATM is going to go to scratch here, because if it continues to carry on, at least I grabbed another C note there. Now we'll see here. Let me take that off. I know that's annoying. Here, let me play this through here, and then I'm going to wrap up here. So let me pause it again. Okay, we're coming into the end of the day, the last bit of the close here, and I stopped it right here just to show you this pattern again. So there's a couple things to note. So as we arrived right here, right, big cluster of 50s and golden zones. So there's likely to be an algorithm that's going to respond there, as it does. So let me pull that off. But that we're on this massive rip. That's going to be a hard trade to take. What makes it a little bit easier to take? Well, okay, let's look here, and then let's look down here. Right, nice divergence here. This is big volume. Well, here's our 150% volume with three green arrows, right? So they're coming hard here. We get into this cluster. Now that would have been, I understand, right? Very hard trade to take. Looking at one is time of day, and for the last 10 years we've been conditioned into these, what is very commonly an end of the day ramp, right? So it's either back to VWAP, or they're just taking advantage of the lower liquidity at the end of the day. Either way, we've been conditioned over the last 10 years to be mindful of selling in the last half an hour of the day, because it's been so consistently a time for the market to ramp. But that's a hard trade to take. But this one you can take. This one, it sets up beautifully. Right? So one, we have a supply zone there, right? Boom. Here's the pattern we look for. So we get here, let me open it up so you can see it, right? Because these, you're gonna get to where, if you pursue this is what you're looking for. So as we come down here, look, there's the change of character, right? That leaves behind here. I should probably pull that out of there. That leaves behind the supply zone. So with the change of character right here, right, we come down. Now we come back to the supply zone. You're literally thinking, oh God, maybe they'll come back to it. Maybe they'll come back to it. I mean, you could have waited all day for that. And let's be let's be consistent, right? So I like to do it this way. Another thing to note, you'll often, very often, which is why we mark them, find these inside bars right around these zones. All right, here's another one here. That's why we inside bars are colored white. So if I was in that, let's see if we can put that together with a no more than a 16 tick stop, right? So that's too much. Let me get down to 16. One more. There's 16. Okay, so there's what my target would be this right here. Okay, so as I open that up here, so that's about 2.5 to 1 here. I wouldn't have been going for more because of the time of day. And then I can see here, this is a level here that the market responded to. You can see it right here. And then I have this big push here of volume. So it's not unreasonable to think that there's going to be could be a couple of things here. One, it could be some unfilled orders, but this is end of the day, so that. But typically, when you see this kind of a bar, that imply, well, you can see it happen. It did actually happen here. So we get right into the range of that bar, and then they kick up again, right? So that could have been more orders getting filled there. But this is, it's called a fair value gap between the high of this bar and the low of this bar here, and then we see, because it comes through so quickly, that likely there are unfilled orders there. So I'm going to use this as an example. You'll see throughout the course of the day. It's a little unusual to see it here at 335. Well, this was actually 330. But here's the trade, right? So we come back to the supply zone. Everything here is saying, whoa. Hey, well, we're weak, right? So it's $500 trade. It's 500 there on a single. It's not a bad trade. Right, and then oh God, where's the IB high? Right, and then I think the next move is we after hitting that here, then I think we eventually we go back and we finish the day right at the IB high. So let me take that off here. We come back to that zone, right? Is there another trade there? Well, maybe there's another inside bar, and then boom, there's the big cluster. Now that's coming into the close. What they have there? Okay, we'll slow down here. All right, so look what they're after here. Do you see there's a series of algos here? So, it's likely from this pivot here, swing. Here's the 50 in the golden zone. Here's their target right there, right? That's an algo trying to get that target before the close. You think they get it? Inside bars, we're coming right up to the close, inside bars. You wouldn't want to be trading now, right? But if you're in the market, you might be pushing for that last little kick. There's the 4 o'clock bar, right? So I think in the last couple of minutes after the close, they do actually get that target, if I'm not mistaken. There we go. Right, okay, so this algo, in the last minutes of the day, look at it, it gets the IB high. Right, gets its target. Right, here it is, swing, right, there's the algo going to get its target at the IB high. 4 o'clock, look at the volume, right? 200% the volume in the last 4 bars because that's on the close. All right, oh God, that's a lot longer than I thought it would be, but good. If you stayed with me this long, I hope you got some value out of this. I hope you can start looking for some of these scenarios, these setups, and recognize, hopefully, our hope is that you recognize the value that these tools can offer to you if you learn how to use them effectively, right? I'm showing you a lot of good trades here. There are plenty of losers throughout the course of the day, right? If you're a day trader, that's the nature of the beast. That's part of the process. So it's trying to be as strategic as possible and looking for those right locations where you get as much confluence as you can possibly find. All right, guys, I hope that's helpful. Just a reminder here, so anything that we've shown here, these are all available to be both trialed as well as leased, so you can step into these. This might look like, oh God, that looks easy, but it's, I've been using these and doing this for a very long time. I don't want anyone to ever come away from any of these videos thinking, oh, well, now it's going to be easy. There's nothing easy about trading. This is the hardest easy money you'll ever make. So with that said, it takes practice. So even if you're trialing some of these, I would encourage you to, if you're trialing or even leasing, until you get really, really comfortable with them, I'd be sim or micros at max until you start to see how the market responds and you start to know what to look for, right? That will be helpful. But don't ignore volume, right? That's one certainly a big part of this template here, is to trying to give you as much insight into order flow as we possibly can on a candlestick chart, right? That was the goal. Watch that TDI, very responsive. I don't ever want to be on the wrong side of the color of that RSI, right? If it's green, I want to be long. If it's red, I want to be short. Or if it's doing something like this, I want to be out. Okay, guys, there you go. Hope you got some benefit from us. Put these together again. Do it on a trial, or maybe you grab a few for a lease, so that you're not so committed financially. You can just decide whether or not it's adding value to your trading experience. And hopefully, with that, you'll think of us if you're looking for new indicators, or perhaps even recommend us to some of your trading partners. Okay, guys, with that, have a good one, and I'll be back next time. Okay, see you later.